Graduating from a college, university, or vocational school like Epic Flight Academy is a major milestone. However, for many students, it comes with the burden of student debt. Whether you took out federal, government subsidized, or private student loans through institutions like Sallie Mae, understanding how to pay back what you owe responsibly is critical to your financial future. In this video, we'll break down the different types of student loans available, help you decide if a loan is the right choice for your aviation training, and share smart strategies to pay them back. Before we begin, make sure you like this video and subscribe so you don't miss out on more aviation tips and insights from Epic Flight Academy. Let's get started. Please be aware, it is important to fully understand your student loan if you decide to use one for aviation training. Stay on top of your repayment terms, monitor your account regularly, and maintain communication with your lender to avoid unexpected costs or issues. For any questions or concerns about your loan, contact your specific lender directly, as they are the best source for accurate and up-to-date information. By keeping these points in mind, you'll be better prepared to make confident, informed decisions about your student loans and how to move forward. First, know what type of student loan you're using. If you already have one and aren't sure, find out. It affects how repayment works. Federal student aid is the nation's largest provider, offering two main types of loans: subsidized and unsubsidized. Subsidized loans are for undergraduates with financial need. The key benefit? The government pays your interest while you're in school, during your grace period, and in deferment, helping keep your total costs lower. Repayment typically begins 6 months after you leave school or drop below half-time enrollment. Unsubsidized loans accrue interest from the moment they're dispersed. You're responsible for all interest, even while in school or during deferment. These loans also come from the U.S. Department of Education, but are serviced by companies like Nelnet. Like subsidized loans, repayment starts 6 months after you leave school or drop below half-time. Private student loans are different. They come from banks or other lenders, often with higher interest rates and fewer options for forgiveness or assistance. Epic partners with private lenders like Sallie Mae and Stratus Financial to give students more choices. For federal loans, repayment typically begins 6 months after leaving school or dropping below half-time, while private loans vary and may require payments during school. Understanding how interest works is key to managing your student loans. Interest builds daily based on your loan's rate and balance. For unsubsidized loans, it starts as soon as the funds are dispersed, even while you're in school. Federal loans have fixed rates, while private loans may use fixed or variable rates that can change over time. Use an online loan calculator to estimate payments, compare repayment options, and track due dates to stay on top of your student loans. Most importantly, borrow responsibly. Aiming for a debt-to-income ratio under 10% of your gross monthly income can keep your finances healthy as you take off into your aviation career. Choosing the right repayment plan is key to staying on track. Federal loans offer several options. The standard plan has fixed payments over 10 years. The extended plan stretches payments up to 25 years to lower monthly costs. Graduated plans start with smaller payments that increase over time. Income-driven payment plans, like Pay, IBR, and ICR, adjust payments based on your income, making them ideal for lower earners or those in public service. Private lenders also offer repayment options, though they're less standardized. These may include interest-only payments, partial payments, deferred payments, or even graduated plans. Some lenders may have income-based options, but this isn't guaranteed. While lowering payments through refinancing might sound appealing, it can increase your total repayment over time. Treat student loan repayment as part of your personal budget, and aim to pay on time and in full to avoid extra interest and fees. If you're struggling financially, it's important to understand your options to avoid penalties and stay in control of your student loans. Deferment or forbearance can temporarily pause payments, though interest often accrues, especially with forbearance. For long-term relief, federal programs like Public Service Loan Forgiveness or Teacher Loan Forgiveness may reduce your balance. refinancing could lower monthly payments, but it often increases your total repayment and removes federal protections. The key is to treat loan payment as part of your personal budget and maintain consistent, on-time payments to avoid extra costs. Missing payments on student loans can seriously damage your credit. After 270 days on non-payment, loans go into default, leading to damaged credit, wage garnishment, and even withheld tax funds. If you're struggling, options like loan rehabilitation or consolidation may help, but these should be a last resort. Consolidating federal loans can simplify payments but may increase your total repayment. Financing private loans might lower interest rates but often means giving up federal benefits. Always compare repayment totals carefully before making changes. Life events can have a big impact on student loan repayment. Federal loans are discharged if the borrower passes away, but private loans may not offer the same protection. Careers in public service or roles with loan forgiveness programs can help reduce debt faster, and income-driven repayment plans can adjust monthly bills to your earnings, though these benefits only apply to federal loans. For parents with Parent Plus loans, separate rules and options like consolidation or repayment assistance may be available in hardship cases. Here are 6 smart steps to pay off your student loans faster. Make extra payments, even during your grace period. Just one extra payment a year can make a big difference. Focus on loans with the highest interest rates first. This avalanche method saves you money and helps clear debt faster. Use windfalls like bonuses or tax refunds to pay down your principal. Even birthday cash can speed up your payoff. Set up autopay. It helps you stay consistent, avoid late fees, and may even earn you a small interest rate discount. Pay extra towards your principal whenever possible. Be sure to tell your lender to apply these payments to the principal, not future interest, and confirm it's done correctly. Use budgeting tools or methods like the snowball or avalanche to stay organized and motivated. With the right strategy, you can enjoy a debt-free life sooner. Whether you're still in school or already starting repayment, smart decisions begin with knowing your options. Stay proactive, avoid default, and don't hesitate to ask for help. With the right plan and payoff strategies, you can achieve financial freedom and keep your focus on your aviation career. Thank you for watching. If this video helped you, give it a like. And don't forget to subscribe so you don't miss more key aviation tips and insights from Epic Flight Academy.